Hello and welcome to your daily dose of Satoshi's news. Today's date is Tuesday, the 8th of April, 2025, the year BSV comes alive. Experience the best of both worlds at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Right, let's see what we got today. We got CSW like absolutely on fire with all these posts. I mean, good to see him back in the saddle, but like literally the amount of work he's producing, I literally can't even keep up with it. Like literally, it is staggering. He does actually make some really good points about the tariffs that Trump is putting on at the moment. And again, you know, tariffs, like you said, is protectionism. You only need them with currencies, but then currencies can be manipulated in value, and that's what this is all about. Basically, you do not need tariffs in a world that runs on a common money, which is what we need to go back to, and I think that's the point that CSW is trying to make there. There was an article there that I wanted to read through by Brian Doty saying Tether's last stand, the collapse that rewrote crypto. Have a look at that. Check this out. CoinDesk has said here, BlackRock secures UK FCA crypto registration. Everyone's going crazy about that. We've got the registration right here. Look at that, they're registered. That was the 18th of June 2024, but they've just got the registration license. We've got some 365 days of Bitcoin history. We'll just look at these beautiful transactions again, and then that'll be the end of the show. Right, let's get into it.
See Satoshi like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong and transactions flying free. Just wait for the Terra node, you'll surely see.
Alrighty, here we go. Yeah, so Craig has put here. They will tell you tariffs help, that they're protecting. Just corrective. A patriotic tax wrapped in nationalist poetry. But tariffs are not the solution. They are the illusion of control, the lie of value creation through restriction. They are the broken window fallacy writ large across border and industries. Bastille law, it in the glacier glass. We see it now in the steel mills forced demand. I haven't really got time to read all of that because there's a lot I want to go through. But he's right in what he says. If the world ran on a common money, then the market would just simply adapt to market forces and everything would run more efficiently. But because we're all running on these artificially manipulated and created currencies that are all securities fraud, and there's one group of people in the world that can artificially increase and decrease the value of other currencies based on their currency being the world reserve currency, and literally they can set exchange rates and all this kind of stuff. It's completely rigged. So basically what they're doing is making other areas cheaper than others and importing stuff, but that makes an economy weak. So basically what they're doing is destroying the world. And I think that's kind of like the bigger picture that Craig is looking at. It's like if everybody ran on a money that wasn't manipulated, we wouldn't need all these tariffs and all this kind of stuff. That's just basically protectionism that's going to be passed on to consumers, because you can't stem the tide for long. Not really. You can get people cheering on and all that, but at the end of the day, market forces rule. You can manipulate the market forces, get people to think what you think, but eventually it all leads to collapse, and that's what's basically those who are behind this orchestration want. But I mean, look at all these posts. There's absolutely staggering amount there. One of the posts I did find, again, I mean, this is completely off topic, but check this out. He's wrote here, she's done, finished, Thunder's ready, 2,500cc of unapologetic mechanical wrath. The largest production engine on 2 wheels, 3 cylinders lined up like outlaws in a firing squad. She breezed through the triple headers that glow like they've tasted hell. I didn't build a bike, I summoned something. It doesn't idle, it seethes like a Southern Gothic sermon crawling out of Flannery O'Connor's throat with a cigarette and a switchable blade. It shakes the bones of the dead and makes the living forget their names. Yeah, I mean, poetry in motion. It's pretty great. But he did continue here. He said, I went down hard, the kind of hit that doesn't just bend metal. It rewrites your bones, reprograms your nerves, teaches you the weight of time when it smears across the asphalt and diesel. Some idiot clipped me, took the bike, took the silence, left me with bruises that didn't show up on skin but curled under it, slow and deep like a bad poem. But here I am, back on the horse, or maybe not a horse. Thunder isn't a horse, she's a goddamn charging bull with fire in her lungs and vengeance in her teeth. 2,500 cc's of redemption. The road didn't break me, it paused me, made me bite blood, taste humility, and then I built her. Every scratch I had, she carries in steel. Every nerve that still twitches when the wind shifts, she silences with one twist of the throttle. So yeah, I went down, but I didn't stay there. I got up, rebuilt, and now I ride again. And again, if you're asking, who needs a Harley? Not me, not Thunder, not anyone. So I'm hoping that was a previous accident that he was in, that he was talking about. But he certainly seems to be okay, because he's on fire at the moment and recovering quickly from his horrendous accident. I think it's back in February. So yeah, wishing him all the best there. Yeah, I just wish I could do his posts more justice by going through them. But there's such a lot there. Yeah, we need to crack on, you know. And that was just like a little bit of a light-hearted boost there. Let's crack on with Brian Doherty then. So he said Tether's last stat, the collapse that rewrote crypto. Diary entry Jan 30th, 2026. So this is a future. Tether's fall, how regulation tamed the global crypto frontier. I still remember the early days of 2025 like they were yesterday. Tether was untouchable, $137 billion in market cap, dominating the stablecoin sector with an iron grip. To most traders, it wasn't just a tool, it was the infrastructure. It moved everything. It was too big to fail, so we thought. Back in March, when Congress finalised the Stablecoin Act, I felt the shift in the air. There was something final about it. These weren't just policy drafts anymore. They were a declaration of war against opacity. And for a company like Tether, whose books had been sealed tighter than Fort Knox for years, it was a regulatory guillotine. Tether's response that month was textbook bravado. They issued statements about pivoting to Asia, partnering with compliance firms, but behind the scenes, the exodus had already begun. I watched Bitcoin's price slip to $88,000 as USD volumes dipped. Traders, especially those of us who had been through the 2017, through FTX, through Terra, saw the writing on the wall. I wonder what this is, like a letter or something. It's strange to sit here now, pen in hand, and think back to how 205 billion string Tether, back to how 205 billion string. Tether still felt untouchable, 137 billion strong. I might have to go back and I can't read that now. I haven't got time. By April, I was hearing whispers from inside Binance and Kraken, discussions about pulling USDT pairs. And when a Bridgewater executive told Bloomberg they were out, I knew the tide had turned. These weren't just tweets and speculation anymore. This was institutionals moving fast. May was the first real gut punch. $8 billion gone from Tether in weeks. It wasn't just the outflows, it was the tone. Social media was on fire. Tether scam. Hit 50,000 posts in a week. I remember scrolling through X and seeing users beg others to jump ship. The fear was contagious. Then came June, the moment of reckoning. The Stablecoin Act became law. Exchanges began slashing USDT pairs like dead limbs. Bitcoin's liquidity dried up almost overnight. DeFi pools cratered. Ava reported a 25% liquidity drop for USDT. You could feel the network unwinding. The bleeding didn't stop. July and August were an avalanche. Binance logged a 50% spike in USDT to USDC conversions. We watched a mass migration in real time. From hedge funds to NGOs in Latin America, everyone scrambled for exits. And when the G7 stablecoin pact kicked in, it was like the door slammed shut behind them. Tether was isolated. What haunted me most during those months was seeing the damage ripple across the global south. I'd worked with some fintech teams in Argentina and Nigeria. Tether was a lifeline for them. When exchanges like Huobi saw 20% volume drop, it wasn't just numbers, it was people losing access to stable value. And when rumours of internal resignations at Tether leaked, it just confirmed what we all suspected. The house is on fire and the fire exits were blocked. Imagine that. Imagine holding Tether and then Tether is no longer accepted anymore. Like, you can't even trade it in and out for anyone. They're dropping the Tether pairs. Literally, this is what is eventually going to happen to fiat currency. And this is what they're trying to do with cash at the moment. Oh, yeah, we want digital crap. You're holding the cash. Or what's it used for? Banks aren't accepting it, can't spend it. This is what's going to happen with Tether, by the sounds of it. By September, it was a collapse in slow motion. The EU's MiCA laws mirrored US restrictions, and the walls closed in. Exchanges processed billions in redemptions. No one wants to be the last one holding USDT, a trader in Hong Kong said, and that quote never left me. It echoed the despair of those holding the bag as the Titanic went under. October sealed it. Binance delisted USDT completely. And again, this is all like predicting the future. MakerDAO, Curve, every major DeFi player gone. Liquidations, panic, a complete loss of confidence. I'd never seen anything like it. Tether's market cap fell to 20 billion, then 10 billion, then 5 billion by December. 96% of its value wiped out. The infrastructure started falling apart. Tether's small contracts were depreciated. Wallets began flashing migration alerts. Leaking memos showed unpaid vendors and a gutted legal team. I remembered logging into one of my cold wallets and seeing the old USDT balance, illiquid, useless, and somehow haunting. By January, Tether was effectively dead, just a ghost in the ledger, kept alive on OTC trades and dead wallets. Below $1 billion in market cap, no liquidity, no trust, and yet something else emerged from the wreckage. On January 15th, JP Morgan and Citibank officially launched their dollar-backed stablecoins. I watched in awe as they processed $5 billion in transactions in 2 weeks. Integrated directly into fintech apps, even Google Pay. It wasn't just a replacement, it was a transformation. USDC soared to $50 billion. I think that's great coin, battered but stable, hovered around $11,000. Institutions, $11,000. Could that be genuine Bitcoin? Who knows? Institutions re-entered. Liquidity recovered, and for the first time in years, crypto felt grown up. We all knew Tether had been skating on thin ice, but we didn't expect the thaw to come all at once. Again, that's what's going to happen. The irony, Tether's collapse didn't destroy crypto, it redefined it. It forced maturity. It bridged the gap between a speculation and legitimacy. Still, I can't shake the question, can DeFi truly survive the microscope of compliance? Will places that relied on Tether embrace this new order or resist it? What happens the next time a stablecoin claims supremacy? Tether's story isn't just a post-mortem, it's a milestone. It marked the end of crypto's Wild West and the beginning of its regulated renaissance. As I write this, I've realised I've lived through history. Not the history we hoped for, maybe, but the one we needed. The age of unaccountable liquidity is over. Now we build differently. Yeah, that's a great article there from Brian Doherty, predicting what's going to happen. Yeah, I would say that's highly likely. Tether is just not regulated, never been audited. And the only network that can actually support stable coins is BSV. Stablecoins have to be built on BSV, and we've already got the Mac Daddy, we've got money, and we've got the Swiss franc. And literally, they're two of the best currencies to deal in, the world reserve currency and probably the most responsible fiat currency, which is the Swiss franc, who refuses to inflate it and therefore devalue it. So yeah, I can very much see that coming. Check this out then. So BlackRock secures UK FCA crypto registration. From Cointelegraph, they said the world's biggest asset manager will be allowed to act as an arranger for iShares Digital Assets AG, who issues exchange-traded products. They're a scam. Want to know? BlackRock's managed... want to know, so I think it's too long, didn't read. BlackRock managed to land on the Financial Conduct Authority's Tough Crypto Register on Tuesday. The UK has received 368 applications for its crypto register, but only 51 firms have made it. BlackRock managed to land on the Financial Conduct Authority's Tough Crypto Register Tuesday, the regulator's website showed. Let's have a quick look at that. Oh. Okay, right, yeah, so here are the ones, yeah. Gemini, Zumo, Bitpanda, Fidelity Digital Assets Limited, CoinJar, Payward, that's Kraken, Ramp Spots Limited. Galaxy Digital. MoonPay, Bitstamp. PayPal is on there. BlackRock International Limited. I'm guessing that's it. Revolut is on there. Wow. All right. The world's biggest asset manager will be allowed to act as an arranger for iShares Digital Assets AG, which issues exchange-traded fund products, a financial instrument that is pegged to underlying asset. In this case, a crypto asset. Oh dear. Registration on the UK's crypto register is not an easy feat. The FCA's crypto register was set up in 2020 to ensure that crypto firms wishing to serve UK clients could only do so after they are registered to comply with the country's anti-money laundering rules. The UK has received 368 applications, but only 51 firms have been approved. As an arranger, BlackRock will be able to arrange the execution of transactions in crypto assets to support ETP subscriptions and redemptions between issuers and authorized participants, but it will not be able to onboard new customers. Also, it will not be able to operate a machine that utilizes automated processes to exchange crypto assets for money, vice versa, without written consent from the regulator. BlackRock joins the likes of crypto exchange Coinbase, who recently managed to get their register this year through a new crypto, although a new crypto regime awaits. Interesting, very interesting. There we go. Look, so BlackRock Crypto Asset Management Group Limited, incorporated on the 18th of June, 2024. All right. Okay, that's 17 minutes gone. Let's have a look at 365 days of Bitcoin history on the 8th of April 2013. TechSpot here reported on an article saying a Bitcoin mining Trojan spreading through Sky spam, Kaspersky warns. I think I remember that one. No, I don't. 2013 can't have been. Trojan spreading through Skype spam. So a mining Trojan, so it was affecting the Bitcoin miners. 8th of April 2019, new sextortion emails uses a CIA investigation as scare tactic. The scammers then demand $10,000 in Gregcoin, or you'll be arrested on April the 8th. That was really quite funny. The 8th of April 2021, arrests over attempts to secure hitman and chemical weapons show the dark web isn't always anonymous. And the 8th of April 2022, it was Senator Loomis talking at the Bitcoin conference. Yeah. A quick look at that one.
I stayed in touch with the White House. I wanted them to know what we were thinking and doing. I've met with Gary Gensler. We've tried to meet with a lot of the regulators.
Yeah, Gary Gensler denied that. Said he didn't know anything about it. Right, let's have a look at the transactions there. So we'll look at that, 82.4. We're at 13,140,503 transactions over the last 24 hours. Absolutely gobbling up. See, look at that. So that means we've got 17.6. So only 17.6% of this pie chart is representative of the 40,000 other coins on there. Look at that. This 17% represents 40,000 coins, and the 82% represents just one, the genuine Bitcoin, gobbling it all up. Loving that. Right, there we go. That's 18 or 19-minute show. We'll leave it there. Hope you enjoyed it. So as ever, if you enjoy these updates, please ding your donations for your appreciation to either Satoshi at sendme.com, handcash.io, rockwallet.me, simply.cash, relasia.com, or senti.ch. We'll leave it there. Hope you enjoyed it. As ever, be aware, take care, stay safe out there, and we'll see you in the next one.
The king still has one more move.